Welcome to the Passive Mobile Home Park Investing Podcast with your host, Andrew Keel. This is the podcast where you can get the education you need to invest 100% passively in the highly profitable niche of mobile home parks.
Welcome to the Passive Mobile Home Park Investing Podcast. This is your host, Andrew Keel, and today we have a special guest with us in Mr. Maxwell Baker, the MHP Broker.
Thanks, man. I appreciate it.
Yeah, totally. Before we dive in, I want to ask all the listeners a real quick favor. Would you mind please taking an extra 30 seconds and heading over to iTunes to rate this podcast with 5 stars? This helps us get more listeners and means the absolute world to me. So thanks for making my day with that 5-star review of the show. All right, let's dive in. Maxwell Baker founded the MHP Broker back in 2009 as a commercial real estate brokerage firm specializing in helping investors purchase and sell mobile home communities, mainly throughout the Southeastern United States. His family has been involved with mobile home park investing since the year 2000, and he has been a part of the management, rehabilitation, and the selling of mobile home parks ever since they purchased their first park. Today, we will discuss where the mobile home park sales market is at in 2023. Welcome to the show, Maxwell.
Thanks, Andrew. Appreciate you having me on, man.
Totally. Would you mind starting out by telling us a little about your story and how in the world you got into mobile home park investment brokerage business?
Sure, man. So when I first started, I was in the Marine Corps as a trumpet player, and my dad, I was back in 2001 to 2005. I think it was. And my dad had bought a mobile home park in some small podunk town in South Carolina. And he had some empty lots, and he asked me, because I was doing hard money loans and financing musical instruments. I was a trumpet player, like I mentioned, for fellow Marines that wanted to buy a brand new trumpet and didn't have the cash. So I was playing the credit card game, like charging them one interest and the credit card was charging me the other. So he was like, look, you're already doing the finance game, like, why don't you do it on mobile homes? And I said, all right, sounds good. So after I did my first deal, I was like, wow, this is a lot better than anything else because I'm getting better cash flows. I'll just keep doing it. So I actually started out as a Lonnie dealer. Shout out to Lonnie Scruggs, the original gangster of this industry. And then I eventually, when I got into college and got out of the Marine Corps, I started flipping mobile homes and saw that I could make decent money. But I was like, one day I want to be a park owner. And I was like, the only way for me to build more and more capital was to be a broker. And I became a broker and bought a couple of deals, did well. And I really enjoyed the brokerage part just because of the challenge. And there was the thing about park ownership is it requires a lot of capital because a lot of these parks have not been maintained for, decades. So realized that pretty quickly. And I was like, all right, I like the brokerage. So we've steadily tried to buy like 1 or 2 deals a year. And we just buy stuff that's like, at this point, my full-time job is brokerage. And then the other part is buying stabilized assets. Like we're not big in the rehab stuff. I've done a couple of those, but I just prefer to buy something that's already done and cash flows because, like I said, this industry can be extremely lucrative. The returns can be outrageous. I know Andrew has done really well with his investments. So yeah, I mean, pretty much in a nutshell, man, that's kind of how we've done it. And we've grown to 36 different states now that we are marketing to. And we average I'd say about 50 or so transactions a year. And we are currently working on a debt platform to source debt for people out there that are looking to buy deals, as well as for our own listings, because we specialize in secondary, tertiary market deals that are typically small, medium size. Don't get me wrong. I mean, we've done, the bigger deals out there, like portfolios. We've done, $34 million deals, and we've done deals that are $500,000. So it just depends. But 80% of the market share in the states that we work in is typically 60 units and below. And that's the pond that we like to fish in, and it works pretty well. And yeah, pretty much it in a nutshell, man.
That's so cool, man. I have a ton of questions. First off, you were a Lonnie dealer. That's how I got started in manufactured housing, which
I didn't know
that. Yeah. So were you only a Lonnie dealer, for homes in your parents' or your dad's park, or were you like doing it, all over?
Yeah. So when I was in college, I actually put an ad in the local penny saver back when you can actually, you could probably still do it now, but back in '05, that's how I was able to get leads. And I was the only person in Podunk, Middle Georgia that was like, we buy mobile homes. And I got a ton of calls. A lot of times they had to be moved, which is back then you could move a single wide mobile home for less than $2,000, which that obviously doesn't exist anymore. A lot more expensive these days. But yeah, I was that's how I started. And I actually, on my very first deal, I learned a lot and unfortunately ended up in court. Didn't do the paperwork right. And when I got in there, my attorney wasted my money and my time and didn't do jack crap for me. And the judge decided not to decide and said, you guys need to figure it out. And I was like, what the hell was that? How can a judge not decide I mean, are you just not going to work today, I guess? So that was interesting. I learned a lot. Now, it forced me to be impeccable with my paperwork, because paperwork in this industry is like, I mean, if you don't have your paperwork right, you ain't got a deal. And it can, as a broker, we're very, very sensitive to what kind of paperwork is being used and how we, business days versus calendar days, stuff like, those little things out there. So yeah.
Totally. And for those of you that don't know what a Lonnie dealer is, they will buy individual trailers and then, maybe in other people's parks, and then fix them up and sell them, with monthly payments to an end buyer that will, buy the home and then pay lot rent. So I did that. I did like 19 of those. I was putting up bandit signs, we buy mobile homes. And yeah, it was just a crafty way to kind of get into the business.
Yeah.
And get
the returns are great. Yeah, the returns are great.
How many of those did you do, Maxwell?
I didn't do that many because I converted over to brokerage. I did about 8. Thinking what it was. I did about 8 of them.
Nice. Awesome. And then you said you've been buying 1 to 2 deals a year. What does your portfolio now look like? How many lots, how many different parks?
Yeah. So we've sold most of the stuff we've had over the years. I'm down to just 3 parks actually now. I've never got over, never got over 7. Like I said, I don't raise money. I'm not a big money raiser for personal reasons. I've always just kind of done it myself, saved my money up, bought a deal, turned it around, and then put it back on the market. We've sold it. So right now I'm down to 3, and I actually bought one last year. It was my first time I ever got into boat and RV storage, which has been a steep learning curve. So yeah, I mean, that's pretty much in a nutshell. I didn't able to start buying deals until probably, back in 15, I think it was, because running a brokerage company is pretty expensive. I was reinvesting most of my money back into it. And then eventually I was like, all right, I've got some capital. We can start buying some deals now. So that's pretty much in a nutshell where it was.
Awesome. And you're looking for stabilized deals. What does the typical deal that you would buy yourself look like?
South of $2.5 million typically is what I'm looking for. It's about, give or take about $500,000 down. Lot rents about $400 or so. I'll buy something at like an 8 cap if it's in a decent area. I don't mind paying a decent price for a deal. We bought direct build city water and sewer deals, and we've bought septic tank deals, and I don't really buy the sewage treatment plant stuff because it's pretty expensive if they go bad.
Sure.
I'll occasionally do some park owned homes a little bit, but I mean, every deal is different, Andrew. Like I'm not particular, and I step aside. We have a deal in Birmingham that just went out to market. I knew we could produce a better offer versus me trying to buy it. It's like I just kind of step aside. I've always been that way. Just like if the client says, Max, I really want to take this deal down, I'm like, that's fine. Like I'll get out of the way. You take it down. Because at the end of the day, we're talking to this guy in Birmingham, and we have this park listed, and we're getting like, 50% down, and I'm not anywhere near going to be able to put that kind of cash down on something like that. So it's just,
Sure.
at the end of the day, we're always trying to look out for the seller. And if I know for a fact we can get a better offer, I'm like, all right, well, let's just take it to market. I really feel like there's an opportunity for you to really get cashed out or some crazy amount of money down. So it varies from deal to deal. But like I said, it's, it's whatever's best for the client.
Totally. You started in the business back in 2009, right? So like the Great Recession, 2009, 2010. Tell us about mobile home park investing during this time, and what did it look like compared to today?
I remember I could not sell, I should say, a 10 cap deal. It sat on the market for like 8-9 months. And it was in the MSA of Atlanta. It was over 100 pads. And now today, that same deal probably would trade at like sub 8. Just depends on, the debt's a big component to what people are willing to pay. It's typically 250 basis points above whatever interest rate they're going to get. That's like the minimum. But man, it's changed. It's just the cost to do business is way different now than it was back then. And obviously there's just more. Frank Roth and Frank and Dave have done a great job educating, and you as well, man. I see you post a lot of great stuff on LinkedIn, and I learned stuff from you, man. That's it's great. Like, you've got a lot of great stuff that you post, and it's all factual stuff. Just, I'm like, I'll read some of your stuff. I'm like, you know what? That's so true. I don't even think about it that way. So you do some good stuff, but like, there's just more people out there that are putting out information to the industry. Like, back then, the lenders didn't even care about park owned homes. They were like you posted that thing on LinkedIn, and I made a comment about control on securing their loan. But back then, man, like, they didn't want park owned homes. They were like, stick around. And I remember I was a broker. I was thinking to myself, you guys are putting yourself in a tough situation, because like, it's been happened more than once, Andrew, where I would see the banks do that, the community banks, and then right before, once they started defaulting, like half of the park owned homes are gone.
Yeah,
and I've even seen it like where 100, like the park owner would take out all the homes before they went into foreclosure, and it's like, what is your park worth now? You have no income. So it makes sense. That's why I'm kind of leaning on the lender side. I know that's not what you want to probably hear, but it makes sense that they have titles. It's just because, at the end of the day, it's just about protecting themselves. And I think the lenders back then didn't know any better, but now they've kind of figured out, well, probably should control the assets that are there producing the money for us to put the value. So there's been a big difference in just understanding how the industry works, and really just trying to figure out, what's the best position to be in.
Yeah, there's definitely more buyers out there, more investors that have heard about the asset class. Frank and Dave, new podcasts. Brandon Turner at Bigger Pockets has been a big advocate for the asset class. So definitely more interest today. But it's crazy that a 10 cap was, over 100 lots was sitting on the market and not selling. That's so crazy. Tell us about today. How's the sales market today? It's almost the 1st of December. It's November 28th, 2023. What is the sales market like today? What deals are moving?
Surprisingly, completely vacant communities are moving. We're seeing those move a lot. Wow. A lot of conversions from beatnik mobile home parks over to RV communities. So, I mean, I don't know what it is, man. All of a sudden we've getting hit up and they're like, yeah, let's put it on the market. And I was like, I don't know who's going to buy it, but man, we get a slew of people coming in to want to do park conversions or put in brand new units. Obviously, the diamond in the rough out there, or the belle of the ball, however you want to look at it, is the direct build city water sewer, paved roads, all lot rent. It's literally as close as you can get to a triple net lease. in the mobile home park world as possible. So that stuff still trades at a premium, even sometimes at rates that I'm like, wow, I can't even believe it. Other things that are trading, we're still just, I would say out of the volume we do, man, like we've probably dropped 15%. And it's just because like there's a disconnect between what interest rates are doing and what sellers' expectations are. A lot of people are just like, look, I'm not going to get my price, or I'm not going to get cashed out 100%, then I'm not going to sell. So we're starting to see a lot more creative financing for people that need to sell. There's always going to be the people out there that are, getting a divorce, partnership dispute, syndicator needs to cash out after 5 years or however long it is. We're starting to see some slippage in the management of communities. So there hasn't been too many foreclosures yet. We did save one from going into foreclosure because, it's tough for you to buy a community that's all park owned home from afar and not have a system, method, and process to manage it. Yeah. Because it'll eat your lunch. So if you have a good system, method, and process, then, you shouldn't have any issues. But a lot of people bought deals and they didn't have that set up. So some of them are really struggling the management side from what I've seen. So it's pretty much it in a nutshell, man.
Has there been any buyers you've seen that have like taken on variable rate debt and are, kind of like what we're seeing on the multifamily, side of things, where there's some distress over there? Do you think there's any of that in the MH space?
I'm not seeing too much variable debt. I'm seeing shorter terms on the loan. Right now we're getting quotes at 8.5%.
Yeah. Sometimes,
the credit unions out there are doing prime minus 50 bips, which is kind of if you're going to go get a park loan, like if you have a credit union, we've actually been cold calling every single credit union that we can get our hands on in all the 36 states and seeing which ones lend on parks because they're the best. This is the best debt in the business right now. If you're doing stuff that's south of 1.5 or $2 million, like credit unions are the next best thing since sliced bread for mobile home park loans. That's kind of what we're seeing, and it's all recourse. Obviously, you might be able to get partial recourse if you put down like 50%, but typically, they're at like 25% down. 25-year ammo. I just did a quote today, and DCR typically is like 1.25, sometimes 1.35 is where they're at.
Yeah, no, that's good insight. Yeah, how has cap rates changed? I know you said like 250 bips above the interest rate. So if you're getting 8.5 rate, you're looking at what? You're looking at 11 cap rates.
Yeah, as a broker, we're trying to push it to 200 bips. But typically that's what people come out of the box saying. Every deal is different, man, because if you're buying a park in a good area and your lot rents are like, $300 below market, obviously you're going to pay
for some of the upside.
For some of that upside there. It just depends on the situation, or if you've got a unique position. Like I know a guy that's got a relationship with a manufacturer, and they do brand new homes. I think it's called Hamilton Homes out of Alabama. They do really well. If you guys have checked them out, and got some decent loan programs as well. It just depends on your situation. That's the great thing about this industry. It's extremely entrepreneurial, just because of you have to be. It's just so many variables. You got the park-owned homes, you got the lot rents, you got people that do lease options. You've got the rental communities. You've got expansion. You've got some of them, like we got a deal in West Virginia right now that's got self-storage in it, if you're into that. And you've got the completely vacant deals. Like there's just so many different ways that you can make money in this industry. And it's pretty fragmented. Like in the apartment world, you kind of, forgive my ignorance, but it kind of feels like you know what you get when you're buying it. And a lot of times in these parks, there's you might get some surprises. Some of them are good, some of them are bad, but for the most part, from what I've seen, it's always worked out for the buyer, just because, if you're buying it right, and the broker that's selling you the deal has done their due diligence up front for you and kind of helps you, wrap your head around the deal. Not to tout myself, but I'm going to, is, we try to do a lot of upfront due diligence because, surprises kill deals, problems don't. And we try to get in front of all those issues. That way we can disclose and set expectations as quickly as possible, because it's just, I've enjoyed this industry just because it's just, like I said, there's a lot of upside, a lot of mom and pops are coming out. There's more lenders are coming out of nowhere, lending on deals than ever before. And, the returns are still great.
Yeah. There's just a lot of meat on the bone. I agree. But what's coming for the next 12 to 24 months? What do you think is happening in the economy, and how do things change in the mobile home park investment space?
Yeah. I mean, I would say election years are very difficult in real estate. It's just everybody typically folds their hands and kind of sits back to see what is going on. But we're starting to see rates obviously level out on the credit unions and community bank. CMBS, agency debt stuff out there is a little fickle from what my experience is. And but the community and credit union stuff has been pretty steady Eddie, because there's so many more people out there doing it. But I'm a little biased because that's what we specialize in. And then over the next 24 months, man, I think the volume is going to slow down a little bit. You're still going to have the breakups and, people getting older and retiring. But it's just right now, it's kind of mucky. Just the market, the way it is. Like I said, we're still moving deals, but it's a lot more. We have to be a lot more creative in structuring how we do deals on the owner finance side. We just had a massive deal fall out of contract that was frustrating because of debt. So, I mean, it's massive deals, like, $10 million for us. It's just, it's kind of tough to say, man. I don't like to be a predictor because I read the book, The Black Swan, and there's always some outliers out there that will just come out of nowhere and surprise you. So I would say that it's still going to be kind of mucky with the buyers and sellers. And I still think there's going to be some movement just because of natural recourse of deals. But I think after the election, I think the Biden administration is going to put pressure on the Fed here to do some stuff this year to kind of get everybody's euphoria back up before the election and claim some ownership on that. I won't get too political, but the kind of my gut feeling that rates will kind of shrink down a little bit next year. And then we'll see what happens after the election. I don't know. Like it's a crapshoot. All I know is, we've as a brokerage company had to expand into more states in order to keep up with the same kind of volume we've always done. So it's just, there's been a slowdown. I mean, I'm not going to tell you there hasn't been. So I don't know if that answers your question, but that's kind of where I'm thinking.
Yeah, no, that makes a lot of sense. I appreciate you sharing your perspective there. Maxwell, just from a high level, what would you say is the toughest hurdle or like the toughest part of mobile home park ownership and investing? Like what's the toughest hurdle that most operators face? What's the hardest part?
People, like your people in-house. As a business owner, like for me, like even operating a brokerage, like we've got about 25 people on our team. And that's the hardest part, is just getting your people working the same, rowing in the same direction, having the same culture, making sure metrics are being met, I should say, because everything else is pretty, black and white. But just the people on your team is finding the right people. Once you get them in there, maintaining them, making sure, they're treated right, paying them a good amount of money and making sure the culture's there. I mean, that's for me, and I think you have a pretty stout team with what you're doing. And it's probably taken you years to figure that out. But yeah, I'd say the biggest variable, the guys and girls out there that are the most successful in this industry have a great team and they have a great system, method, and process to do what they do.
Totally. Maxwell, if you were going to invest passively into a mobile home park syndication or into like a mobile home park investment fund, what do you think are the most important things, you would look out for as a passive investor before investing into that?
I mean, I'm a little different probably than the most people out there, is because like I get to kind of look under the hood with who I invest in, because I see when I do a deal with them how they act, and how whether or not they're, to put it bluntly, an asshole or not. So I kind of have a unique position, and I invest with people that I feel like would do a great job at taking care of my pets at home. Or even I could go and enjoy having lunch or even doing a fishing trip like we were just talking about before this podcast. Like, it just depends on who you like. So if your persona, if you know somebody and you trust them, like I've got a buddy of mine that does vulture deals in the triple net. He does lease renegotiations. I invested probably half a dozen times with him. And we go out and we drink, and we're big bike riders. So we go out and go get some on the Beltline and ride bikes. And he'll come up with the deal. Like, we just flipped a deal down in Fort Worth. It was ironically a boat and RV facility. And he was just telling me like the basics on it. And I was like, you know what, Giles, I trust you. I looked at the numbers. I feel like, you've treated me right the last few times I've done this. And I trust him. Like he's a buddy of mine, and it just depends on, for me, like I invest with people where I feel good about them, and I look at the returns, and if they're consistent with what they say, and they have a very clean system, method, and process, like onboarding, offboarding deals, and not just kind of like slamming together and you get a random phone call in the middle of the day, like, hey, can you wire me 50 grand? Like, they have like I said, very structured. Like, the more structure somebody has, the lower probability it's going to blow up. And Giles, one of my best pals, like, he's extremely structured, and I think you are as well, man. So,
thank you.
If you've got the structure and you treat people right, and you leave a little meat on the bone for your investors, and you make a little bit of money too, like, you're going to be able to live a long time. Like, that's kind of how I run the brokerage. Like, I don't make a killing on the brokerage, but I pay people well, and everybody gets a nice slice of the pie, and I don't have to work as hard. You know what I mean? Just because everybody else is happy making a good amount of money on the team. So I kind of feel like that's me personally. That's how I look at things.
Awesome. Yeah. Thank you for sharing that. Maxwell, what mistakes have you seen operators make in mobile home park investing?
I'd say the biggest thing is the management. Variable debt is another one. Park owned home values. It's a crapshoot on those, man. Anytime I see a person capitalize the income on the park owned home, like, they should be below the line, income, not above the line income. You know what I mean? Mm-hmm. I kind of just look at the park owned home stuff as just like an extra goody. But I always tell the sellers is like, look, it's a crapshoot on these park owned homes, because, I use this analogy all the time. It's like 1970 mobile home in Huntington Beach, California, could be worth $200,000, and that same mobile home in beautiful Albany, Georgia, is going to be worth $500. And they might be the same exact model, but it's all a component of what lot rents are going for. It's just the lot rent. The local lot rent will determine what your home is worth, no matter what. The higher the lot rent, the more that home is worth, just because the demand is there. So that's another big variable, is just the park owned homes. And then not checking whether or not the county will play nice with you is another big variable. I've seen big players out there take down a deal in a county that won't let you replace a home if it burns down. or have age restrictions on the homes, or if a home or if a lot's vacant more than 12 months, they won't let you use it. They just disqualify it. That's another big variable I see people make mistakes on, and we do that stuff as brokerage. Like I said, problems don't kill deals, surprises do. So as all of our deals, we're always verifying, and I've always been that way. And it's probably the reason why we've done so well over the years. We just for me, if I was buying the deal, like I try to show people like, hey, make sure you're doing this. We give them a due diligence sheet. If they don't have one, we have the questionnaire that we ask sellers. It's like 3 pages long. And a lot of stuff is we call the county and see what's going on, just because, it's there's a lot of moving pieces. And if you don't have somebody on your side, like Andrew or myself, that's kind of helping you navigate all the different variables, you can make a lot of mistakes in this industry. So if you've got somebody like Andrew who has a good platform, and has all the stuff we talked about earlier, the probabilities of deals blowing up in your face are going to be very low. I'm trying to think if there's anything else. That's really it. Flood zones are a big variable because a lot of lenders out there don't like lending on those. I think that's about it. Yeah, that's all I can think of.
Well, those are some major golden nuggets there that you just covered, because I think we've added at least 1 or 2 items from every park we've bought of like new things we've learned. So we're continually adding to our due diligence checklist of things to look for, because like you said, it's not a very complex business. It's not rocket science, but there's certain boxes you got to check, and you got to roll your sleeves up, and you got to get hands-on, with calling the local municipalities and zoning, et cetera. So great insights there, Maxwell. If any of our listeners would like to get a hold of you, what would be the best way for them to do so?
So you can go to our website at themhpbroker.com, the mobilehomeparkbroker.com. You can email me at info@themhpbroker.com. Our phone number is 678-932-0200. If you register as a buyer or even a seller, obviously you're probably going to want to talk to Andrew if you're a seller. But if you don't want to talk to Andrew, you can always talk to me as a broker. But I'm messing with you a little bit. But we've got a buyer's guide. It's a book that talks about all the different things you should look out for. It's a free book. All you have to do is register on our website. And if you're a seller, we've also got a seller's guide that has all the details that you should look out for as a seller when you're buying a deal, or better yet, when you're selling a deal, all the pitfalls that some people fall into. So yeah, we definitely kind of play both sides of the spectrum there to help buyers and sellers out. Just kind of, just shed a light on all the different things out there that, people should know when you're probably moving one of the biggest assets of your life.
That's awesome, man. And Maxwell, for those of you listening on the podcast, he's wearing an awesome hat. I got one of those at Seco. It says, "Make trailer parks great again." If any of the listeners would like to get one of those hats or purchase one of those, I know we spoke a little bit. Are they able to do that on your website as well?
So we're actually about to do a redesign here first quarter, but if you want to buy one, happy to sell you one. Just shoot me an email. I think they're about, delivered $30 a pop. Or if you go to Seco, we have them out there for free. So just go to Seco or go to MHI. I think they have an MHI every year in Vegas or wherever they have it. We'll give it to you for free. Just come by the booth. But if you want one now, I'm happy to send it to you, and just shoot me that email. We'll take it from there.
Awesome, Maxwell. Well, thank you so much for coming on the show. Really appreciate it.
Thanks, Andrew. Good luck to you, man. Thanks for having me.
That's it for today, folks. Thank you so much for tuning in.
Hey, are you getting value out of this show? If so, would you mind please going over to iTunes and leaving the show a quick 5-star review? I have a goal of hitting over 100 5-star reviews by the end of 2021, and it would mean the absolute world to me if you could help contribute to that. Thanks ahead of time for making my day with your 5-star review of the show.